Welcome back. Hope you're having a good morning. Well, in the next half hour, Rod, we'll have the pre-open rates. But for the time being, plenty of stocks to discuss. So let's welcome Prakash Diwan, who joins us on the show. Hi, Prakash. Morning. Thanks so much for joining in. Well, Prakash, let's start off with Titan. You know, you had the smaller player, Kalyan Jewellers, that came out with their operational update. And on a smaller basis, that's looking good. In fact, if you look at it in the last 1 year or so, Kalyan Jewellers is the one that's seen a big re-rating. How do you approach Titan, though? They have come out with their operational update as well. Valuations, it's not cheap. It's never been cheap. But your approach to this theme and particularly Titan?
Good morning, Nigel. The kind of this in jewelry, I mean, it's relative to expectations, to be honest. There's nothing alarming about it. But even with these numbers, it ends up doing a CAGR of 16.5% for the last couple of years. So, you know, for a base like Titans, to be able to grow consistently at this rate is always going to be challenging. And they still manage to overcome that challenge. For the likes of Kalyan Jewellers and some of the other smaller players who are seeing some expansion in their reach and you know, product mix, you will see certain gains. But you know, today, look at where we are from a positioning perspective of the market. Everything is kind of stretched to in terms of valuation. So if something were to go wrong, if the market gives into some sort of vulnerability, it's the smaller ones which will probably lose more ground. So, you know, so from that perspective, Titan continues to qualify as a portfolio stock.
Okay, I think there's
some issue in terms of newer lines of businesses that they have. So, so let's be very clear. Titan will be valued richly and will continue to be you know, priced at a premium, and we'll have to maintain that.
All right. Since we're talking about consumption stocks, two more stocks I wanted your view on. One of them is Nykaa, where the company talked about how the combined net sales value of all their BPC businesses will grow at low to mid-20s, which is not a bad thing. I mean, on a year-on-year basis, that's one. And the other is there's a big upgrade on Sula Vineyards this morning. So both on Sula and Nykaa, would you buy the name? Would you hold for the longer term?
So, Sonia, Sula definitely, you know, I'm not too much of a Nykaa consumer or fan, but Sula, yes, very clearly. I think the change in the duty structure is extremely favorable. It helps them gain market share, establish a bigger presence, and deepen their, you know, efficiencies wherever they want to kind of expand with this kind of a you know, a relief of sorts in terms of the earnings. So the margins was always a little bit of an issue, and this takes away that burden. So my sense is you will see a little bit of interest come back to this particular name. On Nykaa, my personal thing is that they'll have to continue giving better numbers every quarter, every month, for able to justify the kind of valuation that they've always been at. So I would give it some time. These new age businesses haven't yet delivered, except for a Zomato, which probably seems to be a turnaround. But my bet would probably be on Sula out of the two names that you mentioned.
Prakash, hi, good morning. You know, the one sector which was the standout performer was real estate. Largely the first half of the week, the last one. I was looking at Sobha, 30%, you know, in the last 5 sessions. Not so much with other names. Sobha, of course, was the clear standout within real estate. What from here? And what do you think happened there?
No, I think, you know, if you look at, good morning, Krishan. See, Sobha came into different geographies in the last couple of years, but it took them time to start making some headway, whether it was the NCR, whether it was, you know, even markets in Western India. It's now that Sobha has started seeing that inventory build up into a realizable state. So once that is there, what happens is that all your investments, your return ratios, everything starts kind of getting into a favorable zone. And from that perspective, you know, they've broken this jinx that they had, that they were a South-based company or a Bangalore-centric company. So from that perspective, it's probably the only player which is fairly national and has a pan-India presence that's growing, that's getting well established. But otherwise, real estate has always been a very regionalized kind of a localized kind of a thing. So from that perspective, I think people will like the resilience that Sobha offers from its portfolio. But if you really ask me, the recent GDP print talks about a very high improvement in construction. The estimates are fairly robust, 10% plus, means that real estate will continue to benefit going forward as well. So there's no reason to be worried, though it's been the best performing sector in the last calendar 23 also. But my expectation is real estate for the first half will continue to do well. and then probably you'll have other sectors coming into the picture. So you could look at some of the names which offer opportunities. Last year we had spoken about a small business out of NCR called Tark. Look at how they've performed. So some of these unsung heroes are the ones that have actually delivered more. But from the larger names, Sobha and Oberoi probably still stand out given the balance sheet strength and the presence that they have.